Uh-oh, guys. PayPal just reported their earnings, and their stock is down over 12%, and their stock's been getting destroyed. I mean, you guys probably remember during the pandemic, the stock was over, I think, $300 per share. Now it's at, what, $66? Yeah, that's not good. The market cap right now is right around $75 billion, which I think at one point it was at $300 billion, maybe a little bit under that, and their PE ratio, trailing 12 months, is at a 30, which for the growth right now, that's a little high in my opinion. So they ended up doing revenue of $7.04 billion for the quarter. That's up 9%, which 9% year over year, that's decent, but compared to what it used to be, I think it used to be, what, 15, 20%, 25%. That growth has slowed down tremendously, and operating income came in at $1 billion, up 41% year over year, and EPS came in at 70 cents, up 61%. So that's good on the operating income and EPS fronts, but for net revenue, not looking so great. And as for guidance, guys, for Q2, net revenues are looking to grow around 6.5 to 7%, which really is not good at all, considering, again, like I said, they used to grow 20, 25%. So their best growth days are for sure behind them when it comes to revenue. And you guys can see GAAP earnings per diluted share, not bad, 81 to 83 cents compared to the loss of 29 cents last year. So yeah, that's what PayPal did. Don't forget to get up to 15 stocks from Moomoo in my bio.